The legendary Malabar coast in the state of Kerala has been home to many a famous adventurer and explorer. For almost 2 centuries, traders have made boundless fortunes trading in its coffee and spices. My guest today is a modern-day explorer, someone who's making his fortune not from coffee and spices, but from common stocks. Hello everyone, I'm Ramesh Damani coming to you from ITC Grand Central with a new episode of the Wizards of Dalal Street, A Fresh Breeze. My guest today, the Managing Director of Malabar Investments, Sumeet Nagar. Sumit, thank you and welcome to Wizards.
Well, thank you very much for having me here.
It's a great pleasure. Sumit, the object of your affection when you were young was a slide ruler?
Yes, you never know in life where inspiration comes from. In my case, it was a slide rule. My dad was an engineer and he had this slide rule and I was fascinated by this, how this simple ruler could do these complex calculations. And I thought, well, maybe I studied hard, I could become an engineer and I could get to use this. But thankfully for me, they invented calculators, so my shortcomings were never found out.
Right. But I know you went on to study engineering. How did your engineering education help you actually in equity markets?
Well, I think it was very useful. The engineering profession is wonderful, right? It's very logical, it's very rational. It forces you to think about how something works. And I think you can take that concept and take it to business and investing.
Charlie Munger would be smiling in Omaha. He's been trying to teach investors for many generations, Lollapalooza or the mixing of mental sciences, and you figured that out.
Well, this was one part of it. I still had a lot more to run, but...
You said markets are, rational and logical, and they're anything but rational and logical. When did you figure out that actually markets are irrational?
Well, I think, first of all, I didn't even have the basic skills of understanding businesses. So I went to a business school. And
you went to Wharton?
Yeah, I went to Wharton, and I learned a lot about not just sort of investing and finance and accounting, but also about marketing and pricing and advertising and operations. And these were all very useful skills to have to build those mental models. But still, it wasn't enough, right? There was still this sort of people aspect and how do they think and how do they interact.
Psychology.
Yeah, that was very useful.
Yes.
And luckily enough for me, I had an opportunity to join McKinsey & Company right after business school. And I ended up learning a lot of those things over there.
And yet your assignment at McKinsey left you a bit frustrated. Why is that?
See, it was because, I had the opportunity to work with some of the best investors on the planet.
Right.
And many of those investors, when we looked at opportunities in India, would say, find us the best ideas in XYZ sector. And when we did that, some of the best ideas were these small companies that were nimble, that were growing faster, that had good fundamentals, and yet they traded at a discount.
But
those investors felt that these were too small to move the needle for them.
That must have been frustrating. You do all that work and find no one was biting.
Yeah, so while that was frustrating, in many ways it sort of showed me that opportunity, this sort of white space, and that eventually formed the genesis for Malabar.
Malabar was started in 2008. Now, I'm sure you're a good engineer, but your sense of timing the markets sucked.
I think it's terrible, right? You have to probably go back 80 years to find a worse time to start an investment firm.
Right.
So that's why we tell our clients we are actually not good market timers. But what we did have right, which was this concept of finding great businesses run by capable and trustworthy entrepreneurs and investing in them with a long-term perspective. It's evergreen. It works in any environment.
In fact, they'll thrive in a bad environment where the bad companies really fall down.
Exactly. And so these companies actually, went through the 2008-2009 with flying colors.
Not only surviving, but thriving. Tell me some of the opportunities that you spotted and became great stocks for you in the first few ideas that you put into Malabar.
Yeah, so in the first year, we invested in companies like InfoEdge, Hawkins Pressure Cooker, Page Industries.
Tell me about Hawkins.
Yes, it was a great product that everyone in India knows about. And yet, when we looked at it back in 2008, this was a company that was growing at more than 20% year on year. For the prior 6 or 7 years, every single year they improved their gross margin, their operating margin, their net margin. And it's a business that was trading at 8 times trailing PE.
Right? And yet the 2008 crisis actually helped them because prices of their key inputs came down.
Yes, the key raw material is aluminum. Aluminum crashed by about 50% plus. And when we checked in the markets, these companies were holding their prices. I mean, that's phenomenal pricing power when your key raw material falls by 50% and you can still hold your prices to consumers. And so we could see that the earnings are going to expand. And so that was a great trigger to invest in this wonderful company.
And the stock from the lows to the highs went up almost 50x. A lot of the analysts were looking for technology companies that cater to the West, $1 billion, and yet you looked at a domestic opportunity. Tell me about Naukri.com.
See, Naukri was the biggest and the most profitable internet company in India back then. In fact, I think even today it is the most profitable internet company in India. And as you know, in the internet businesses, the company that has 40% traffic share has about 60% revenue share and about 100% profit share.
Winner take all.
Winner take all. And that's exactly what Naukri was doing.
What was the business model that was differentiating? They had a good business. They had a dominant market share in Naukri. What did they do with that cash flow?
So, see, they essentially created this exchange between 20 million sort of job seekers and the people who wanted to look for those resumes. And once you have that, it's very difficult to replace that.
You can't replace the market.
You can't replace.
Crawford market is Crawford market.
And it generates a lot of cash flow. And what InfoEdge was doing very successfully was actually deploying that cash and growing other businesses. So one such business was the 99 acres, a real estate business, and that they seeded, and eventually it has sort of grown to a much larger size today. And if you took out the losses from that, the business was actually very, very reasonably priced, and it actually became even more compelling because many of the FIs were actually indiscriminately selling in the market, and that's what brought the price down. So we're able to buy this great business at very good valuation, and has done great for us.
Tell me, how do you distinguish management? Give me an example of where management, you've been able to find a good management and they've delivered for you.
Yeah, so one of the examples, we talked about Hawkins. Later on, we also ended up investing in TTK Prestige, which does the same thing.
The other competitor and dominant in the South in the pressure cooker business.
Yeah, and then over time, they expanded their product range beyond pressure cooker to
kitchenware,
many other kitchenware and kitchen appliances and so forth, and very successful at that. So we had a chance to get to know Mr. Jagannathan, who was the chairman of the company.
Founder, yes.
And over the last 4 decades, he's been running this company. But even today, he spends several days every month cooking in his own kitchen because that's how he figures out how to innovate and make new products. Now, that is the kind of passion that we look for in our management.
Yeah, you're actually talking about a CEO who eats his own cooking, literally.
Absolutely.
That's good. Markets are a humbling place. I mean, you know that. We get things right, we get things wrong. Tell me about something that you got wrong and what did you learn from that experience?
Sure. We made our share of mistakes. One of the examples...
No. We all do, of course, I'm kidding.
So one of the examples was, we invested in a company called as Voltamp Transformer back in 2011 end. And at that point in time, we saw that all the capital goods companies were beaten down. And this was a great company. In our view, that's the best transformer company in India. And we invested in it back in 2011. But what we found through 2012 was this company had a lot of exposure to currency because many of their raw materials were linked to international prices, even if they were sourcing them locally. And when the demand environment is soft, there's no way that you're going to be able to pass on that cost increase, which shows that you have limited pricing power. And so in that case, we realized that was a mistake, and we ended up getting out of that, thankfully, by not making a big loss.
Right.
But yet, it was a mistake.
Your value investing skills came from your mentor, Sash Spencer, right?
Yeah, Sash was a wonderful guy. I think he...
Tell me briefly about him.
See, Sash was an ex-McKinsey partner who went on to form a very successful private equity firm in the U.S. He was also instrumental in forming probably the best value investing firm in Asia called as Value Partners.
And you trained under him.
Yeah, he was very gracious enough to take me under his wing and gave me the opportunity to start Malabar. And
you taught us about compounding, which is great. But I know you're someone who also counts the many blessings in his life, don't you?
Yeah, we're successful in this business only because there are some external stakeholders that allow us to be successful. First of all, it is our investors. They put enormous amount of faith and give us their hard-earned money for us to invest it prudently.
Back you up.
Right, to back us up. And we've seen that over the last 6 or 7 years, maybe 3 times the markets actually fell quite a bit. And our investors came back and gave us more money at that point in time because it was a very good time to invest in.
Vote of confidence.
And that's priceless, right? So we couldn't do this without the support of our investors. So that's number one. And number two, it's amazing people who run the companies that we invest in. You know, they're very passionate about their businesses. They work really hard, and that allows us to benefit from their hard work through our investments.
The magic of seeing great companies grow.
Yeah, and benefit from that. So we're very thankful to them.
You know, we talked about shooting for the moon in terms of compounding. You know, someone who actually helped the Apollo program said all it took to get to the moon was a Fortran compiler, a slide ruler, and some brain power. Well, you're using 2 out of 3. That's not bad.
Well, I'll try to run Fortran, and maybe I'll have the trifecta.
Sounds good, Sumit. Thank you so much. We'll see you next week on another segment of the Wizards of Dalal Street, A Fresh Breeze.